Hi there, Serial Trader here. Let's have a look at the major U.S. indices, as there's been enough upwards price action that I think it justifies changing the outlook here, at least on a shorter term wave count basis. Alright, so just to summarize, I definitely still view this as a 5-wave decline from the top and a likely trend change with that 5-wave decline. I also still view this bounce up here to that previous 4th wave just above 2800. I still view that as an ABC corrective move up. Now where we're starting to change things is, instead of having this immediate either 3rd wave or C wave to the downside, it looks like something more complex is developing, and now there's actually evidence to embrace that, yeah, okay, we're not going to immediately come down here and take out the lows. And today's extremely strong rally and close well above the T-line certainly suggests that that's what's going on here. Now, I remember previously mentioning that I liked that we had this ABC up. It basically found resistance right where it should have, and that also happened to be that Fibonacci level, that 618. And it just looked almost too perfect, right? But it didn't consume enough time, and that was a concern early on. So now we've come down. Looks like we have failed to go down in the immediately bearish scenario. So I'm going to go ahead and change this a bit and just embrace that we have ABC up, and now we're working ABC down here. And I'll just change the degree on this, and we're going to go minute. And now we're potentially going to be working another ABC up, and depending what kind of pattern this is, if this is going to be a double zigzag, so a WXY, we'll be looking at, say, the equality relationship between W and Y as a potential area, and that's right at 2842, which happens to be in between the 786 and 618 retracement of this overall decline. So I'll go and throw these labels up here, and we did ABC up for W, ABC down for X, and then gonna possibly come up in this Y if it is in fact a double zigzag. Let me just make sure that is minor. Yeah, okay. So this is a potential scenario. There are also other corrective patterns that could be in play. Right now we don't have enough price data to be confident which one it will form. So far we just have that 3-wave move up and a 3-wave move down that failed to make a new low. So it's certainly viable that we have a WXY in play. But as I mentioned before, we could also have this triangle scenario in play, where we just go sideways in a range. And if I can just throw the wave up there, where we just go sideways in a range. If we're doing a B wave, if this is an A down and we're doing a new triangle B and then C down, we could chop around here and frustrate a lot of people, well into the new year if we do form a B wave triangle. So that's a possible scenario. And going back to this chart here, there's also the possibility that we're doing a flat, and that would be an ABC up. Let me get rid of the WXY labeling here. So a flat pattern would still be a larger ABC, and I'll get to the nuances here in a moment. So in a flat, you have a 3-wave move for wave A, okay? And the subdivisions are really going to dictate what's really going on here. I'll just get rid of this channel here. And, okay. So ABC up for A. Then we have this ABC down for B. And then you would actually do a 5-wave move up for wave C of a flat, okay? If this is the pattern that's playing out, you do a 1, 2, 3, 4, 5, right? And that would be, let's see here, minute. Okay. And you roughly want to see, this didn't go quite low enough in the B wave for me to like that it's a flat, because it should be more of a double bottom, but it still went deep enough you could entertain the possibility that we're working some sort of flat pattern. But you'd want to see it kind of find resistance near the top of this range here. It could slightly exceed it. That would still be acceptable. Okay. So you'd have your ABC up, and that would still be for that larger two. Larger 2 or larger B, right? If I can grab this thing. Okay, yeah, got it. So if I can just show that. So this is another possible scenario. ABC up for wave 2 or wave B, and then come down in that third wave or C wave. So the bottom line is, it looks like we've started another leg up, and it does not look complete yet. So the short-term trading direction is now shifted to the upside. And I did close the put back spread because basically it was put in place so that if this thing really fell apart and fell apart quickly, it would do extremely well. But I don't want to hold it now that it's going against the expectation, at least on a short-term basis, because the passage of time is the enemy of that thing. It's not really the movement of price that is the enemy. So I can certainly reestablish another bearish position if we come up here and fail where we need to fail and start rolling over again, maybe get a candlestick sell signal or something. That would be another potential short entry opportunity. But for now, the short-term direction should be focused to the upside. All right, so I've laid out some different potential scenarios for wave formation. I'll just favor the WXY for now, although that is certainly subject to change. As I've already highlighted, it could be this or the other couple scenarios I showed there. Okay. And there's still the very, very remote possibility that we're doing, this 1, 2, 1, 2, and that we're still going to come down in this strong third wave, although I view that as not very likely at this point. Technically, I mean, we've done almost a 100% retracement of this move down from this pivot up here. If somehow we failed to break above this level, which was at 27.46.75, if we somehow fail basically right here and immediately start reversing down sharply, that'd be the only way I could embrace that this was just a very deep, smaller degree wave 2 and that we're heading down as initially expected. But I think at this point, the odds favor that this up move is not done yet. But just thought I'd throw that out there in case we somehow do not break this level and we just turn down immediately. Again, not that likely. So yeah, that's what I'm currently looking at. And I mean, this up move could easily take us into December, possibly well into December, before we find some sort of potential pivot. Okay, so that's good for now. Go to thing with some candlestick chart. So you can see, yeah, we came off that oversold condition, and now we're coming off that nicely. So until this thing starts getting overbought, I think there's still a potential upside left here. You can see we closed well above the daily T-line, and we also have the 3T line crossing above the T-line, so a bull cross there on the moving averages. And just a big solid green candlestick closing near the high of the day, so a shaven top. So I'd be wouldn't be surprised to just see immediately further strength tomorrow. Maybe even a gap up, who knows. But we'll have to see how we react here at this 200-day simple moving average. Also this 50-day simple moving average, they may provide resistance. The 20-day simple moving average certainly didn't provide any resistance. And then there's this channel here. Maybe we'll see resistance at the top of the channel, which also happens to be right around where that 200-day MA is. But I think it's likely we go up here and at least challenge or even exceed these previous two highs, whether it's a flat or it's a double zigzag. The only way we fail to get up here is if we are working, a triangle, and if the A, B, C, D, E, and then down again. but we'll just have to see how the pattern forms here. Now on the weekly T-line, let's see here. Weekly T-line, we're basically at the weekly T-line. So that has been a significant resistance level ever since we really started breaking down there in October. So, I mean, if we have further strength tomorrow and close strong, we're basically going to be back above the weekly T-line. So that's notable. And then there's also this 50-week simple moving average, which may provide resistance. But we'll have to see. I think that's also fairly in line with where the daily 200 simple day moving average is. Okay, so that's the view there. Let's go to the Dow Jones Industrial Average. Okay. The Dow had a big day, got well above its 200-day simple moving average. 3 T-line crossed above the T-line, closed well above both. Closed well above the 20-day simple moving average. So the next potential resistance level would be the 50-day simple moving average on the Dow. And then, well, there's also this level here, which is right around 25,510. And then after that, there's our significant pivot up here that we had. And that was at 26,278. And on the weekly, also the Dow got oversold in the oscillator. Now we're coming out that condition. Nowhere near overbought. So certainly that, from that perspective, there's more room to run up here. Going on the weekly, currently, obviously we haven't closed the week yet, but just having a peek. Weekly, we're slightly above the weekly T-line. So just make note of that. And we'll go to the Nasdaq Composite now. Okay, Nasdaq Composite. So Nasdaq had a big day as well, coming off the oversold condition, and now obviously confirming, and we're nowhere near overbought. We already broke above these resistance areas here and closed above them. So the next possible resistance area would be up here near the 50-day and the 200-day simple moving average. And actually, you're starting to get a bear cross here on the Nasdaq Composite. Just starting. That 50-day is crossing below the 200, but we might be coming up to try and save it here. We'll have to see. Interesting, though, that the Nasdaq is starting a bear cross. That's not usually a bullish thing unless it flattens and then starts coming back up here pretty soon. So yeah, it should be interesting to see how we react up here on the Nasdaq. Previously we got up here, basically failed near the 200-day, came down. We did make new lows on the Nasdaq. So again, the Nasdaq's pattern could be a little different. It might be A up, B down, and then C up for an expanded flat, or we might be doing an A, B, C, D, E triangle. But this cannot be a double zigzag on the Nasdaq because we did make a new low here. So that limits the Nasdaq's two corrective, core patterns to the possibility of just either an expanded flat or a triangle. So that's a little difference from the other two indexes, but directionally it doesn't really make any difference. All right, so Nasdaq weekly. Let's have a look here. So Nasdaq has not come up just yet to touch the weekly T-line, so still below that on this index. And that's just kind of a result of how low we went compared to the others. Nasdaq was the leader to the downside. Okay, so yeah, basically everything looks like there could be some more near-term bullishness. That's kind of the bottom line here. Let's go to the VIX. And the VIX didn't pull back as much today as one might have expected with the kind of strength that the equities saw. So we still haven't broken that key level here to the downside on VIX, which would be just above 1609. We didn't even break this little higher low that we had here, which was at 18.1. We got as low as 18.18 and closed at 1849. So the VIX really not tipping its hand yet. It'd be nice to see this VIX really collapse down and settle right back into a tight range to embrace a more sustained bullish move. But right now VIX still just not revealing too much. Okay. Now, before I end the video, I think I'll just go back to the wave chart there. Yeah, sure. Now, if we go in on a shorter term time frame, let's see where we're at. Yeah, I mean, I could try throw a little wave count here off the bottom. It does look fairly impulsive at this point. You maybe have a little 1 up, 2 down, a 3, a 4. Yeah, no overlap there, so that works. And then maybe you had, oh, this might be an extended fifth wave, this whole thing. I mean, you could try and say that you had kind of a fifth up here and then a little pullback, and now we're starting a third. But that'd be a pretty small pullback for this overall move. So you could certainly have an extended fifth wave. And within the fifth, you have your 1, 2, 3, 4, 5, 4, 5. So we're extending to the upside here. So definitely coming up in impulsive fashion. This looks fairly overbought on a short-term basis. So any kind of pullback here would be expected pretty soon. It's not just going to keep going straight up, but definitely doesn't look like it's done going to the upside here. So yeah, that's just kind of the view on the short-term wave sequence off the bottom. Anyway, that's probably good for now. Serial Trader signing off.